Hey, everybody. Welcome to Midday Market Update. Might be soon getting a name change because I've got a new person that we will be doing this together as a tandem, and that is Patrick France. My name is Glenn Tompkins. He's Patrick. Say hi, Patrick.
Hey, everybody.
No, you were just supposed to say hey. Say
Hi.
hey, Patrick. No,
Hi.
hey. Say hey.
Hi.
Oh, okay, we'll go with that. Welcome to our channel, and I think that this is the first time that Patrick and I are both dual streaming. Well, this is probably the second time, but this might be an ongoing thing, and we hope that you tune in every Wednesday. And I think the name is going to change. Patrick gave me a new title. We're going to work on that. And also some other things as well. But it's important that we're here today because the Fed minutes are today. So the Fed minutes could give us some insight as to what interest rates will look like for the next couple of raises. Before we get started, Patrick, what do you think about, excuse me, the interest rate issue right now?
I mean, I think it's necessary to raise rates. I think they're a little bit behind the curve on it, but at the same time, from where we're at, I don't see even a full basis point raise to affect markets drastically enough that would, send the market spiraling, because even if they do raise rates, let's say to a full percentage point.
Hold on, breaking news. Fed officials plan to shrink the balance sheet by $95 billion a month, the meeting minutes indicate. All right, so that's the first breaking news we got in regards to that. I want to see, Joey, can I take it?
Yeah.
I want to see if we can get a live. There we go. Fed agrees to balance. There he goes. This one says 60 billion. Mine says 95 billion. We'll see. So we're going to try to keep some of this going in the background. Hold on. Let me put the volume back up so you guys can hear what's going on. Real quick, if you can hear everything that's going on, whether you're on Facebook or whether you're on YouTube, let us know. Type in with VV Nation and where you're tuning in from. All right, but let's take a listen for a quick little second here.
But I know that the fixed income market wants to hear that, Kelly. So to recap,
can you hear it,
$95 billion
I can't hear
the monthly caps on the
you
runoff,
can't hear
about double what it did in 2017, a much more rapid pace. And the Fed very seriously considering 50 basis point rate hikes.
Can you hear it now?
At the March meeting, thinking they would be appropriate at one or more future meetings. Kelly?
60 billion of treasuries, 35 billion on the mortgage-backed side. Steve, stay right there, and thank you very, very much for bringing us those headlines right off the bat here. Let's get some reaction and analysis from our panel as markets actually.
All right, here's the Fed minutes, folks.
We are still negative, but the Dow is only down 96 points right now. The NASDAQ had been deeply negative to the tune of almost 3% and is coming off those losses as well. Bill Nelson is here. He's the chief economist at the Bank Policy Institute. Vahan Janjigian is chief investment officer.
They didn't introduce us, Patrick. They should have been introducing us too.
Kelly and Bob Pisani. Rick, let me just go to you. What's the bond market doing?
Well, traders had this one pegged. Basically, they wanted to sell equities and sell bonds and treasuries and mortgage backs right up until the minutes were released. Then they wanted to fade that and buy, and it certainly seems like a good strategy. One trader told me this morning that he was reading in January on his system, and I do think it was the competitor system, that J.P. Morgan was talking about $100 billion of runoff a month at that point in time. So this isn't shocking to the market.
Looks like it's right in line with JPM.
I knew they were going to say that.
Yeah.
$100 billion, so in a way it's a bit
This
less.
isn't shocking to the
We're
market.
at 246 in twos. We're at 249 in twos prior to the minutes. We're at 262. 259 in 10s, we're at 256. We're at 262 in 30s, we're at 259. We've steepened the yield curve 10s to 2s by about 1 basis point.
So, Glenn, I can't hear you very well.
Much, it is not moving as
still right now you can't?
As many feared yesterday.
No.
Think about what they're saying. They're going to cap it at $95 billion a month, see how it goes.
All I
I'm
can
not
hear is
saying whether I
the
agree
video
or
playing. I
disagree,
can't hear
but
you.
many thought they would be coming into a much larger potential number with more of a shock value. The reality is It still looks like
He
Fed
said you
Fund
might have to
futures
turn your
looking for
volume up.
225 to 250 basis points total tightening. That's where we should end up at the end of this year. Of course, we're debating how to split that up between 25s and 50s, but I think the market is speaking volumes that there was no big surprise here, but
Yeah,
the Fed
I
continues
agree
to
with that.
communicate what it thinks it's going to do in the months ahead, especially with regard to the specifics on the balance sheet.
Rick, thank you for that. The
through
market
there?
speaking
Okay.
volumes there in terms of bonds. What about in terms of
No.
stocks? Bob Pisani, I'm looking at the Dow here. It looks like it
All right,
went
I'm
up
going
for the
to
first couple of beats.
mute him
There we
for a
go.
second unless something else pops up. So, Patrick, I'm with you. I don't think there was any big surprise as to what was going on. Can you hear me?
Yep, I can hear you now. There
All
we go.
right. I don't think there was any big surprise as to what was going to go on. This is my thing. As you answered the question about coming late to the party, because I think that the Fed did as well. All this time for the past couple of months, I've been saying that the Fed utilizing the word transitory reminded me of Princess Bride. I do not think that word means what you think it means. You know, that was what my thinking was. And with that, I'm a big, I think that at one of these interest rates hike before the end of the year, it will be 100 basis point. Now, the problem is with that is how the market responds to that. And I think that he's trying to do a little bit of a balancing act to raise interest rates to go after inflation, but trying to keep us with a soft landing. I think the soft landing comes off the table because of how far behind the curve they are. What do you think?
I mean, not necessarily. I think, even with the raise in rates, anything that's tied to that. If
You saw what Miss
inflation-
McClintock typed in? She said, it's inconceivable.
if you take into account, the raise in rates plus the inflation currently, even with a 2% interest rate, let's say, you're still negative overall. So therefore, your money is better, and you're able to generate a better return on your money and the market still than you would in anything interest rate based.
Well, because you're not getting even though the interest rates are going up, like you said, they're not going to go up tremendously, in the overall theme of things. So are we going to start putting our money into the market? Probably put our money into the bank? I don't think so. You're not going to get as much return as you will in the stock market. And actually, in case you did not know, Patrick did an awesome video yesterday about the yield inversion, the curve. If you hadn't watched it, by all means, please go back out on our YouTube channel and check that out. Real quick, if you're brand new to the channel and if you haven't already, don't forget to hit the subscribe button, hit the bell icon. Don't forget, if you like the content that we're bringing live today as the minutes are going on, don't forget to hit the like button as well. All right. And today, and it looks like going forward for a minute, on Wednesdays, we will have a combined presentation with Patrick and myself. All right. So with that, anything else you want to add to what's going on? Oh, if somebody says you have an echo, you may have to turn your speakers down. Oh, no, Joey did it?
I think it's you.
He thinks it's me. Okay.
So one of the things, though, that I was talking about in yesterday's video, for anybody who didn't see, I'm not going to spoil everything, but one of the main talking points was, the fact that there's been so much manipulation from the Fed since 2010 to, keep the markets going higher, that, we could see these we could see these yield curve inversions, but that really shows just more upfront risk rather than long-term risk, which could be the cause of it, which would indicate, higher inflation right now is a short-term risk, but lower inflation going forward, which could cause that yield curve inversion as well, more so than, a slowdown in growth. So, I see this worry that we have with rates and all that right now being tied to that more so than anything else, especially when you take into account the VectorVest, timing the macro scale, the market climate. I think that really holds true more so than a worry about slowdown and growth that we currently have in the U.S.
All right. Let's do this. Unless anything else comes up, it seems like they're just talking about the same thing over and over. I'm going to open up into an article that you wanted to take a look at about the Fed. Read the story and tell me why you picked this as a story to take a look at.
Yeah, so this is something that not a lot of people are familiar with. Most people haven't even, or most news articles haven't even covered this. It's been something that's been flying under the radar, and it's something that happened even before the COVID relief came out and all the government stimulus for COVID came out. Started back in the fall, right before the lockdowns of 2020?
Yep.
And it was these banks needing bailout money before COVID even hit. So I find it interesting that, you know, we're seeing how much money these banks needed to get that wasn't even announced until 2 years after. They had a quiet period of 2 years after the initial lending happened. And it's something that has been, you know, talked about with the reverse repo loans that have been going on from the Fed. And it's something that, you know, needs to be brought to attention because it's not getting enough attention, in my opinion.
All right.
One of the key points down in towards the very bottom, you know, there's a lot of great information in here.
You got access. You can move it down if you need to.
Alrighty, I'm looking at it on my screen, so give me 1 second here. So one of the key points that I want to look at, oh, there we go. Scrolling down towards the very bottom, let me maximize this because it's hard to see. Is JP Morgan Chase, you know, one of the biggest banks out there. One of the things that caught my attention, where is it? Looking for the quote. Oh yeah. In terms of assets, JP Morgan Chase is the largest bank in the United States with 3.3 trillion in assets as of December 31st. Bank of America being the second biggest with 2.5 trillion. And it has in here, I'm trying to find where it is because it's a little blurry on my side, but it has in here the amount that they've actually borrowed. And where is it?
There it is. Maybe, but the Fed's program during after 2008 financial crisis made one-day overnight loans. Is that what you're looking for?
Yeah, there was some terms or some actual numbers behind it though, and it was something around the line of a few $1 trillion essentially that JP Morgan Chase has borrowed on their own, not even, you know, including the whole entire program, but just their you know, just that one bank itself. So it looks like there was actually something going on before we had the COVID lockdowns.
Okay.
That, you know, banks were in trouble and nobody was talking about it. They put, you know, a hush hush on it, and then all of a sudden you had the COVID relief coming out and all these banks got even more money, and basically it helped prop them up. So there was something going on before that, you know, needs looked into and needs to be talked about more, that, you know, the average person, because it's going to come down to taxpayers, it's going to front the bill for all this.
I agree with that.
So I feel like this is something that needs to get more eyes on it, needs to get more media coverage to bring to light, you know, what's actually going on with these banks, and taking what the Fed was saying and taking it with a grain of salt. Because obviously, you know, if you're doing well as a bank, you don't need to take a few $1 trillion worth of a loan from the Fed to keep your business going. So
yeah.
I wanted to that's why I found this article, you know, interesting. It just came out, I believe, just a couple of days ago.
It came out.
Yeah, I wanted to bring this to attention, bring eyes to it, bring it to more people's attention. Yeah, it came out yesterday.
Yep.
So, and then that brought me to wanting to talk about, you know, looking at JP Morgan, maybe considering looking at it as the opposite of a bull trade, maybe looking at it as a short trade, a bearish trade, especially if, you know, the markets start to get ugly, if, you know, we see changes in the direction of the market, could be an interesting short trade to take advantage of.
Interesting. I got a comment here from Mad Dog Mattis. The Fed can also employ a contractionary monetary policy to fight inflation by reducing money supply. And I think the reason, you know, the whole idea of raising interest rates is the way to reduce the money supply, within an economy via decreased bond prices and increased interest rates. If you decrease the bond prices, the bonds, which are our debt, is it not? If you decrease the bond prices, well, if I decrease the bond prices, that means I'm decreasing the yields that I'm going to pay out on these bonds. Is that not correct? And if that's the case, then why would I want to buy bonds even at a lower price if my yield won't go up? Or are they making them into, for the lack of a better word, garbage bonds, or by lowering them and maybe trying to raise the yield on them? Yes, no, maybe, Patrick?
So sorry, it's hard to hear you a little bit.
Oh,
I'm not
gosh.
I'm trying to make sure the audio doesn't echo.
Oh, well, can you hear me if I talk towards my camera then?
Yeah, there you go.
All
That's
right.
better.
All right. So I got two different mics going on at the same time. I guess that's the issue. Interesting from a contractionary perspective of lowering bonds and raising interest rates. And I think that if you lower the bonds, who's going to buy them? You know, they may be lower, but in order for me to buy them, I still need to have some semblance of a high possibility of getting more in return when those bonds mature.
Yeah, and I mean, to front the whole stimulus or the COVID stimulus, the relief package, or to be able to cover that, they can't lower the price of the bonds to be able to afford that, or else they're going to have to sell a lot more at a lower price to make the same amount. So
yeah, so I think I'm with the raising of the interest rates, and I still think that interest rates need to go up a little faster than what they're going up. And I had a story, it went away, that they're going to be more aggressive on upcoming interest rates increases, which I think is necessary. I'm still of the mindset of they need to make one of these raises at 100 basis points. There's no ifs, ands, or buts about it. Let me bring up the VectorVest software so we can take a look at what's going on in the market. All of the major indices are going down. There's no ifs, ands, or buts about it. The NASDAQ leading the way to the downside. Now, Patrick, if this was expected, why are the markets still going down? What's your opinion?
I mean, I think it's temporary.
Okay.
You know, they had a little bit of relief because you saw, okay, that's less risk, or there's less unknowns now that they have the minutes. But at the same time, all the people that are betting on things to go down need to force it down, need to close their positions, and then we start to see it move higher. But, you know, I think it's just a lot of people taking in the data. But it's what we've been going over for the last 4 or 5 months now. You know, it's once everybody's fearful for the rumor, then once the rumor comes, or once the news actually comes out, things start to improve. I don't think this time's going to be any different. You know, as we look at the market climate, earnings are still rising. Corporate earnings are still outpacing inflation. Markets are still the best opportunity there.
I don't disagree with that. And if this wasn't a surprise, then I'm with you. I'm thinking that the market should start rising back up. I'm going to do something that we do here. I'm going to bring up the DJI, the SPY, the QQQ, and the VVC.
You're going to throw an IWM?
I can't. No. I'll tell you why in a second. Because I'm going to bring up the quad thingy, which can only look at 4 stocks.
Ah.
So now I will bring that up, but then I'll also bring up the IWM on another graph. How about
it's
that?
pretty much going to follow suit with everything else we're looking at right now.
All right. So I don't need to do that anymore. Here's the Fed minutes. And for this to not be a surprise, the market responded negatively. All right. I don't know if this is overreaction. If smart money is sitting on the side saying, let all these youngins do what they do and then we'll get back to business. But I'm looking at all of them falling on volume. All of them are falling on above average volume. And I'm looking at intraday 5-minute bars. So as the Fed came on at 2 o'clock, the markets responded adversely. Now, let's go see if the smart money said, all right, we'll give them a few minutes for people to react and go Katie bar the door, and then let us come in and do our work, and we'll see what happens. Vem, if you keep spamming, Joey's gonna put you out the money. Put you out. He's gonna take you out. he's gonna put you in timeout. I'm just telling you that. All right. And Donald is what I was doing is saying exactly what I'm saying, that the dumb money is selling, and that the big money is sitting back. As you see on this next 5-minute bar, look at all of the candles. They're all getting ready to bounce right off levels of support, just about. So maybe the smart money.
Stop loss hunting?
Say again?
Maybe some stop loss hunting?
Could be. And a lot of people could have gotten stopped out. Now, whether it's dumb money selling or the market's, air quotes, manipulation, pushing the market down to get lower prices and then start buying, I don't discount that. I'm with you without being conspiracy theorist. I think there is manipulation in the market. There's no ifs, ands, or buts about it. But now you see, look at these bars. All of these bars are starting to open up as open green bars. And I'm thinking that smart money said, all right, youngins, sit down. We got this. And they're going from there. Floyd says, I like that. Floyd, are you in Mayberry? Floyd says that was important. It slightly dropped before the pop. That is the right direction to fade the pop. So we'll see. Look at the Dow. Look at that Dow's bar. Look at that nicely moving higher. Look at the S&P. Let's go back. Look at the IWM, the lower dollar stocks. Same kind of scenario, that after the announcement, the reaction, the knee-jerk reactionary stuff took place. And now big money is going, yo, we got this. John says, even if the dumb money is selling, in this interest rate rising environment, there are so many great stocks to short. And you know something, if shorting is your thing, you can actually do that. Absolutely. I know Patrick and I, which is a good thing, we invest differently. He's a lot more aggressive than I am. All right. And, I'm not going to say this is not the time to short stocks, especially if we go back to our homepage and the primary wave is now down for 2 days in a row. I wouldn't say that it's not okay to short stocks, but we do have a confirmed up call that changed, and then the market just decided to go, we're going to crap the bed, and it did. But the shortest, most aggressive indicator we have, the primary wave, turned it down. I wouldn't be adverse to selling stocks short. Let's do this a different way. Let's put this on a 1-month graph. Put all of these on a 1-month graph. 1 month, I'm going to take some of this away too. 1 month, take that away. 1 month, take that away. And 1 month, take that away. That's the market, all of them. And the 3 and the 8s, which I like to utilize in the VectorVest system, the 3 and 8 exponential moving averages, as of yesterday's activity, turned down. Turned down on the Dow, turned down on the spiders, turned down on our VectorVest composite, and turned down on the Qs. So put into place what John just said. This interest rate rising environment, there's so many great stocks to short. I'm not sure I'm fully on board with shorting yet, but maybe I'm dipping my toe in the water because the 3 and the 8s have crossed bearish on all of these. What do you think, Patrick?
I mean, I think there's some good opportunities to short. I wouldn't be shorting the major indices or the bigger moves, because at that point you're just trading the averages. But I mean, there's always, just like in a bear market, there's always a few stocks going up, just as in a down market, there's always a few stocks going, or just as in an up market, there's stocks going down. So yeah, there's always going to be those opportunities out there. I had a trade this morning, ADN, I think it was, and made about $1,000 on a quick trade in about 30, 45 minutes. As a short trade. So yeah, I mean, there's definitely some opportunities for both long and short positions, but it takes some time, or I mean, you really have to pick which ones you go. I think it's more of a cherry picking market right now for.
I agree with that. Yeah.
more so than, a basket of trading the one way or the other.
Mad Dog says rising interest rates tend to hurt growth stocks like tech. Investors tend to look for stable companies like commodities, the Dow Jones, stalwarts, or even older established tech firms. I agree with that too. Like the Apples and the Teslas, the Googles, the Caterpillars, the Lowe's, the Home Depots, the companies those are the go-tos. Those are the go-to mainstays that people feel more comfortable with. And it's interesting that gold is starting to rise too. And I still don't think there's a direct correlation to the market going down and gold going up the way it used to. I think that sort of kind of went away in 2008. But nonetheless, that used to be a mainstay to go to gold. And I'm not absolutely sure that is still, that the direct correlation is still there. That's just my opinion.
I think the further away we get from the day that we got off the gold standard, the less gold becomes that
go-to
historical play.
Yeah. Justice says, what are your thoughts on the Brazilian stock market? I don't know what's going on in Brazil specifically, so I can't answer. Unless you've heard some news that's going on in Brazil. I like the meats in Brazil. That's why I go to Chima. It's the great place to go eat a lot of meats. All right, so I need Chima to support me on that. They need to sponsor me, just like Cafe Bustelo does. I don't know much about what's going on in the Brazilian market. Just, I don't want to try to blow smoke where it don't belong, Justin. I don't want to make up something. All right. I'm liking that on the YouTube side. People are responding. Huh?
That's Facebook.
What's Facebook? This is Facebook here. Nobody's chiming in as much on Facebook. Well, actually, Stephanie said, SQQQ, why it's not making new highs for the day? Well, the market's down. Let's go back to the homepage. The market's down.
Starting to see things rebounding a little bit.
Yeah, let's go. I'll bring up the SQQQ. That's the short side of the Qs. SQQQ, I'll put this on not a quad thingy, but a double thingy. How about that? There it is. The SQQQ, as the market was moving down today, the SQQQ did rise. All right, look at the IWM gap down for just about a full red candle. That's some confirmation to the down move today on the IWM. The SQQQ is higher than it was from the open, and it gapped up. So Stephanie, it's higher than it was yesterday by a big gap, and the gap hasn't been faded. So I'm not sure what you're saying, my friend, but look at that. The gap hasn't been faded. The gap hasn't been.
Though, gaps tend to fill 90% of the time historically.
Well, this one ain't did no fadation.
Not yet.
Yeah. Well, we'll see.
The bell hasn't rang though yet.
Say again.
The bell hasn't rang yet though.
The bell. The fat lady hasn't sung. I can't say that. Can I say that, Joey? Joey says I can say that.
I think you have to just say person now.
No, I didn't call no person out. I just listen. If anybody gonna call me out, Joey told me to say it. I'm putting Joey's sitting right there, and Joey said, "Glenn, say that," and I did say that. All right, no, Dave, I gave the quantosity on the 4 stocks that we were looking at, unless I add 2 more stocks to that one. I'm gonna put these all back on intraday 5-minute bars. We're going to see what's going on, live. Look at that. Look at that little bit of rebound. Oh, yeah, baby. Yeah, that's what I'm saying right there. That's the Southern coming out of me. And intraday, 5-minute bars. Patrick's more Southern than I am. And where is it?
Lived my whole life below the Mason-Dixon.
Yeah. You were, West Virginia's below the Mason-Dixon, yes? No? Yes? Yep. All right. Yeah, I'm from New York. I'm above the Mason-Dixon.
Yeah, we were smart enough to side with the North, even though we were still part of the South.
All right, look at the rebounds happening, folks, on the Dow, on the Qs, on the S&P, and on the VVC. The IWM doesn't seem to want to do that. Intraday, 5-minute bars, current day. The IWM is trying a little bit. Fogo de Chao. Oh, I like Fogo de Chao. I went to Texas. One of the times me, Jerry, and Brian Conahan all went to it was a birthday weekend, so it had to be in March in Texas. First time I ever went to Fogo de Chao, and that was before I even went to Chima. Chima, I found out after Fogo de Chao. Fogo de Chao is wow, love me. Brazilian stock market year to date has beaten the S&P 500 all year 2021 to 2022. Okay. There's an ETF. What's the ETF for Brazil? Listen, if it can beat the S&P, and that's fine. If you're playing it, play it. All right. I don't know. There is an ETF.
BZ.
Huh?
I'm trying to remember what it was.
I'm trying to. Brazil. BRZU.
Yeah, there you go.
There you go. BRZU. And now I'll put this almost on, I'll put it on quadation. There's BRZU. You said it's up, beating out the S&P. There's the move on it. And even it's pulling back. All right, so I'd be careful with it right now. Let's go look at the IWM over the last. That's been pretty flat, but lower than it was from the beginning of the year. Go ahead.
Glenn, I just thought of one thing to bring to attention as well.
Go ahead.
What type of year are we in right now? In terms of
we're in a
politics?
little bit of a choppy year. Overall, I still think up, but choppy year. Go ahead.
In terms of politics, though.
Oh, we're in an election year.
Exactly.
So, yeah, that could have an effect. So, yeah, I think the Brazilian market, Justin, looks good. All right? It looks great. Would I take it right now? Not over the last couple of days. Could I have taken it prior to now, especially off of that bounce at 83.30? Absolutely. And the volume on it was good. But you know what's interesting? Was this on your radar at all, Patrick?
Which one? BRZU?
BRZU?
No, I don't really trade anything outside the U.S. markets.
And it wasn't on mine as well. So unless you bring it to my attention or Patrick's attention, it could have definitely gone to the wayside.
I mean, you could look at emerging markets with EEM and EEV, I believe it is.
EEM? And what was that?
And EEV, I think, is the other one.
That's the short emerging market.
Yeah, so one's the bull, one's the bear.
Let's go look at EEM.
I traded that a few years ago, but it's definitely been a long time ago.
Yeah, and the Brazilian one is outperforming it as well. All right. So, wow. John says, Glenn, what is interesting is that with this move up, I have only had to sell one stock and that hit the stop loss. So again, depending, and I like what Patrick said, going back to the stocks that you feel more comfortable with, those mainstays, you're probably right. They've been holding on, except for my Apple. I was in Apple, I made some money, and I started losing some of that, and I pulled Apple off the table. But there's other stocks besides Apple that are probably holding their own in the current market's conditions, which is fine, which is absolutely fine. All right, mid-election year, April has been up a lot. Well, we'll see. And I think a shock, this may be a different story this year. And Patrick, back me up on this. Because we're in a different type of election year because of high inflation, that may not be the case this year. What do you think, Patrick?
I think it is the case because, I mean, if you read any articles out there, if you see any polls out there, there's a landslide coming for the Democratic Party.
I've been hearing that as well.
And with that being said, you know, as much as people don't realize it, most people's wealth is tied to the stock market, whether it be through teachers' pension funds, retirement accounts, you know, all of that. People don't realize it, or people don't realize how much their savings and their money that they have is tied to the stock market. So yes, it's been rough, but if they can keep it propped up for, you know, the elections, that could potentially help them, you know, in the midterms a little bit better than what it's currently looking like. So I don't know. I see that being a big player in this one.
Talking about that, Mad Dog says, ITUB price gained 52% 2002 year to date. That's one of the stocks that's in my portfolio. I own 900 shares of ITUB. So I'm in that stock. I am in that stock. I like Mattis. You know why I like Mattis? Because I'm a United States Marine. Hoorah. So I'm a big fan of Mattis, always has been, because Mad Dog Mattis is no joke. All right, so that is one of the stocks that I'm currently in right now. Ashok says EEM has too many Chinese stocks. I'm just giving you statistics, Glenn. I got you. 50% of Americans are in the market. I don't think that's not a, I don't know if that's a bad number or if that's an interesting number. What do you think the average amount of people are typically in the market, Patrick?
The last number I read, which has probably been 6 months to a year ago, was roughly around 60%.
Okay.
I mean, because you have to realize a lot of people don't realize that, teachers and, people who work or have pension plans built into their retirement plans, these pension plans are trading from the market. So they don't look at it because they just see it as, oh, my retirement plan when I retire. But it really does have to do with the market. So, a lot of that gets overlooked and gets forgot about when you look at the grand scheme of things. So I would say 50% may be a little low, but 50 definitely seems reasonable.
I got you. All right. So I wanted to pull back and see what's going on in the market still. Joey, let me get back to see if anything new is coming out of CNBC. They're still talking. Good Lord. I think they're done talking about the minutes. I think they're done talking about the minutes. So
it's one thing as well, Glenn, to take a look at, I was just focusing on, one of the ETFs I've been focusing on for the major indices is the FNGU and FNGD, the FANG ETF.
Actually, hold on. Let me put that into your list. We're going to come back to that.
All right.
We're going to come back to that. So Patrick and I both have some stocks, FNGU, FNGD. We're going to have some stocks for you guys to take a look at today. All right. With that being said, stay on the homepage, stay on the graphs. There was that little rebound, and now the market's coming back down just a little bit. Remember, though, we are looking at 5-minute bars. We are looking at 5-minute bars. Now, interesting. How about I do this, Patrick? Here's all of the gap downs. Hold on. Let's go see. A couple of times today, they got right to those levels of the gap.
Third time's a charm.
Well, how you know? That's what I tell. I'm on my third marriage. I said that to my wife. I said, third time's a charm. She says, divorce is off the table, but murder is. So, all right. So,
or just 3 strikes and you're out at that point.
Well, yeah, we got that too. I've got levels of where all of these stocks gapped down this morning. All right. And Patrick is right. Patrick was like, the market ain't over yet. Let's go see what happens by the end of the day. I'm very curious to see if all of these indices will start to fade the gaps by the end of the business today. That's going to be very interesting. All right. I'm going to bring up some other things that we both wanted to take a look at today as far as news. How about that? How about we do that? We did your first story on this one. This was another story you want. Or is this one was mine? This one is mine. Elon Musk to join Twitter's board says significant improvements are coming. I saw another article because a lot of people were like, yeah, maybe you're going to get Trump unbanned from Twitter. Another article came out and said negatory. The board has no control over that. So I thought that was very interesting. I think that now Elon Musk is the biggest holder of Twitter. He's on the board. I think that he's a good forward thinker, and I think he can bring a lot to the table when it comes down to Twitter. But that was interesting in that a lot of people were under the impression that maybe he could get Trump unbanned, and he said, nope, can't do it. That's not what the board's job is. Your feelings, your take on that?
Trump. Well, first off, Trump wouldn't want to be unbanned, especially with his own social media platform. That would hurt that prospect there with DWAC. And then secondly, you know, a lot of people, I think it helps. I don't think it's going to do anything with Trump, but for Elon Musk specifically, people know Elon for tweeting a lot. And I think, you know, a lot of people join Twitter just to follow what he says, especially if you're trading and that kind of thing. So I think it could definitely help. And I think he has a lot of insight that could help it grow.
Okay.
But I don't think it has. I mean, Trump wouldn't want to be unbanned because that would, one, take away some publicity, and two, hurt his own social media platform he wants to start. So
how about John? John says Elon will tweet what Trump wants him to say. So now, I'm glad you brought up DWAC because I got another story. Why did Truth Social DWAC stock down again today? And a lot of this is talking about executives departing or leaving from building the app. What say you on this?
I haven't seen anything about this yet, so this is news to me. I mean, DWAC is just a speculative play to begin with.
I agree with that.
It's a wild roller coaster. So,
okay, I just wanted to hear what you had to say about this.
That thing can swing
either way on any day,
pretty big on any day of the week. So
yeah, okay, cool beans. Damn, I got all of the freaking stories. I'm going to bring up another story, but I still want your opinions on all of these stories. Hertz reveals how it will fund Polestar EV purchase. Did you hear about this story about Hertz is getting 65,000 cars from Polestar?
I have not.
Okay, that's fine. I've been on this. Huh?
I'm waiting for the punchline to come in the joke.
There was no punchline. I got no punchline. If you've watched any of my videos, right now I'm on this clean energy kick, whether it's charging stations for electric cars or liquefied natural gas or lithium, all of these things. And I thought this was a big story in that Hertz, this is the second purchase that they've made in regards to EVs, helping the EV space. I'm still going to be a big fan that more and more people will talk about at least getting an electric vehicle, even if it's as a second car. The prices of these vehicles are still high, but I think if you look at a Prius or a Volt or something like that, a lot of those cars outside of Tesla and Lucid and Rivian are a lot more affordable as electric vehicles. So, and the reason
they also
say again,
don't look nearly as good either.
They don't look nearly as good. I'm with you on that. My wife said, who was it? Somebody said that no, it wasn't my wife. It was Ray. How did I get my wife and Ray mixed up? That's crazy. Ray said he saw like a Rivian or something on the side of the road somewhere. And I said, but the car looked beautiful. And I'm thinking that a lot of these cars are banking on the beautification of these cars. So,
I mean, I saw a Lucid a couple of weeks ago driving around the area here. First time I ever seen one in person. I mean, it looks good, but it kind of looks like a fancified Maxima, like an Nissan Maxima almost.
You know something? How much more different can you make cars? I mean, what more radical change can you make to a car?
Oh, you can do a lot.
Tesla truck.
The Tesla truck is ugly. That is an ugly truck. Patrick thinks it looks okay. I think it's an ugly truck. Oh, Patrick's just looking. You can argue the point. I think it's an ugly truck. What did you hear about the Hummer?
You either love it or you don't. And I just think it'd be really funny, especially from where you and I live in the heart of NASCAR, and you see all these big diesel trucks around everywhere. I just think it'd be really funny just to blow the doors off of one of these big diesels in a full electric truck. And just have people just scratching their heads saying, what was that? And, it's a truck, but it didn't make any noise and it just blew the doors off of my truck. So I just find that to be kind of humorous personally. So that's where I find what I find intriguing about it. A truck that can do 0 to 60 in like 2.5 seconds. Whew, that's pretty impressive.
Interesting. Floyd's Garage says that Powell getting inflation under control is the most important thing. I don't disagree with that because inflation affects everything we do on a daily basis, whether it's food, fuel, whatever. I don't disagree with that. But how is he going to do it? And I think he's got to be a little bit more hawkish on the rates. All right.
I don't think the rates are the main issue. I mean,
say again?
I don't think the rates are the main issue, though. I mean,
so how do you get inflation down?
That is the historical way of, combating inflation. But I mean, you start doing some oil drilling in the U.S. You start producing stuff in the U.S. You get rid of the backups of all the, cargo ships that we have off the coast, bring stuff in, and that helps. That lowers the cost. That lowers inflation. You get things running again, and the Fed doesn't control that.
You're absolutely right. I did see, and I think I might be putting into a video how frackers are moving around right now to still try to go get oil. I need to look a little deeper into that. But I'm thinking about that. Wait until the diesels catch you when you are charging. Wow.
But I mean, that's the thing, though, is the U.S. could produce a lot of the natural gas, or U.S. and Canada really could produce a lot of the.
We already produce a lot of gas, and we could produce a lot more oil.
And I mean, there's a huge demand for it, and we're missing out. It's like being the owner of, let's say, a whole bunch of, what is it? Let's just say we're the owner of a whole bunch of
ice cream,
Cafe Bustelo, and the whole entire world says, "Oh man, I love Cafe Bustelo," and the price goes skyrocketing. You're just sitting on this inventory, but you're not selling it. Like, why not take advantage of the current situation and actually start doing something about it?
I can't disagree with you. I could disagree with you, but it's stupid to disagree.
I mean, you want to hoard the Cafe Bustelo for yourself.
It's because I'm fat and I'm greedy. So yes, I would. But, I'm missing out on a money-making opportunity if I do that. Absolutely. The quality and quantity of credit is important. Credit for consumption and asset purchases results in inflation and is unsustainable. Credit for productive. So, that's another big issue behind raising interest rates. Raising interest rates makes it harder to get hold of money, thus taking some of that money out of the economy or out of circulation.
But let's be honest about the situation. I get part of that, but at the same time, we've been in this cycle since 2009, 2010, let's call it that. And inflation has been stagnant. Inflation has been well below what their projections were. It wasn't until the stimulus, when they basically doubled our money supply in a 12-month period, that we're now starting to see inflation kicking off.
And then they said it was transitory, that it wasn't an issue, and they just swept it under the carpet, which was bad business.
I mean, because a lot of it has to do with the supply chain issues. Until they, everybody goes back to work, and until countries all across the world start relaxing on some of the restrictions they have, we're gonna be in these same experiences.
All right. I want to bring up a story for you. In case anybody doesn't realize, from a meme stock perspective, Patrick's a big-time GameStop fan, and I like AMC. So I want to bring up a story specifically for you because he's going to be the best one to answer that question. What does GameStop's share split mean for the short squeeze? I'm putting you on the spot because I don't even know if you even knew this story existed.
Yeah, I've seen it, but all I need to see is who it's written by, and
you have control.
All right, but yeah, I mean, I've seen this article. All I need to see is this name right here, and I lose any trust in the article. They've been known for all the stuff the Fed or the DOJ is now going after for writing pump and dump schemes. So they lose a lot of credibility when it comes to this. Basically, there's talks that there's not talks. They announced that they're going to be doing a vote for this upcoming shareholder meeting where they want to increase the total number of shares available from 300 million to 1 billion.
Right there.
Only 76 million shares are actually trading currently. So there's still a lot in inventory if they wanted to do a share split. But this increase to 1 billion, puts that potential a lot higher here for how big of a split they could do. And one of the things with it is, there's a lot of work that they're going to be coming out. I expect to see a lot of news coming from GameStop over the next few months to up to 6 months or so, especially with their NFT marketplace, their crypto exchange that they're working with. There's a lot going on with that. And this could be, everybody's just expecting it to be just a stock split. It could be a stock split, or it could also somehow incorporate their NFT marketplace and their crypto exchange that they're working on. And if that kind of news comes out, that would really be a game changer. That wouldn't just make it like the Tesla. That would take it, the Tesla stock splits plus one step further. So I like what they're doing with this. I see a stock split lowering the price down to make it more attractive for people out there. Because, right now there's been that over the last year and a half, there's been that debate between AMC crowd and GME crowd of, the price is too much or too high for GameStop. I can afford more shares of AMC. Well, if they do a stock split and that lowers the price down, the shareholders get compensated by getting more shares added. The shorts against the trade, have to buy in. It forces them to buy in. And then it takes that whole debate of, oh, this one's cheaper, this one, is cheaper, and going back and forth. It takes that out of the question. So it gives people who are interested in these stocks, a better comparison when they just look at the initial price tag on it. With all the announcements I expect to see coming up in the very near future, this current level, that run up we had to 200, I can see that very easily being taken out and continuing to run very, very soon. And that kind of brings me, when you looked at the list that I had together for today, looking at GameStop, it's pulling back a little bit right now, but on a daily, I know we're only going to look at intraday, but I'll point this out. There's a Fibonacci retracement of 38.2, I believe it is, right at 150 or 152.95. So if you put a support floor at 152.95, and that goes from this most recent run up that we've seen over the last couple of weeks. But that I find to be, a healthy pullback after a big run, which you need. You need a healthy pullback to be able to, continue to move higher. You don't just go straight up forever. It's not sustainable. This has been a healthy pullback or healthy correction after that big run up. It's consolidated around this point. We dipped right below that. It doesn't really look like it feels too comfortable staying below that point. And we've seen it continuing to bounce off of that as a support and starting to move higher from it. So I like the play. I like the look on it. I'm liking the GameStop trade, especially. I look forward to seeing what kind of news comes out over the next few months as well with this one.
So actually, let's stay right there and talk about some of the picks that you like today. Did you hear me?
Yeah.
Oh, okay. So this is your list.
I mean, so the picks that I had here, Tesla, I like the whole Elon Musk trade. I really think for right now, Tesla is still clearly the number one in that sphere, if you will. The stock split coming up definitely brings good news, going to make it more attractive. If history has a way of repeating itself, which it typically does, that's always been a bullish move for Tesla. So I like the play on this one. Dollar General and then Advanced Auto Parts are more for the fear factor. If you're really worried about the economy tanking and us going into recession, there's no better stocks out there than looking at Dollar General or Advanced Auto Parts. People are going to look for low dollar options, which helps Dollar General rise. And people are going to look to be taking care of their own cars right now, more so than they've done historically, because they can't go buy a new car unless you're going to wait 6 to 9 months.
Or because of inflation and buying a used car is so expensive, even on a used car.
Exactly. So people are going to be keeping their cars a little bit longer. You know, those go back to the 2007, 2008 style of mentality. If people are really worried about a recession, those are the stocks you want to keep an eye on in your portfolio. GameStop, we just talked about that. JP Morgan, I brought in here just because that article we looked at earlier. JP Morgan is also the only sell rated stock in here, has the lowest or one of the lowest RT ratings when you take out the 2 FANG stocks that we put in there. So I like that as a short trade. And then, yeah, we've talked about GameStop. Then you just put in FNGU and FNGD. So I like the FANG Plus. Anybody who's watched that video I did last week when I talked about the FANG Plus stocks knows my thoughts on that. And FNGU tracks the FANG Plus. And for people not familiar with it, FANG, most people are familiar with that. Facebook, Apple, Amazon, Netflix, and Google. Well, FANG Plus adds Twitter, Tesla, NVIDIA, and a couple other, and 1 or 2 more, or Alibaba, and maybe 1 or 2 more. Basically, it adds another basket of 5. One of the things I found interesting with it is the similarities between the move that Elon just made with Twitter and that being in the same basket of the FANG Plus stocks is similar to what, GME's Ryan Cohen did when he made a big purchase into Bed Bath & Beyond. He knows that there's a basket going on of these heavily shorted stocks. So what did he do? He bought into a company that, affects the performance of his stock, not because they're related, not because they're the same company, but because they're tied in together between, whether it be swaps, who knows. But he knows that when that stock has big news, his stock shoots up as well. So if he can boost another stock inside the basket that's, affecting his stock, that helps his overall performance. And then, Musk is doing the same thing when he took his Twitter position. So they're very similar styles of these, influential people, if you will, entrepreneurs, if you want to call them that. So if you like what Elon Musk does, then you need to check out the Ryan Cohen story, because it's very, very similar, and he runs things very similarly to what Elon Musk does. So
there's a little bit of similarity going along.
Yeah, you can say that too.
All right. All right. So there's Patrick's picks, and I think that when we do these, we're going to have picks of Patrick's and picks of mine. I'm working on this one where it is. You see this right here? I don't know what I want this to really mean yet. You see it on the screen, Patrick?
Yeah.
I don't know what I want that to mean yet, but I think it's going to be funny. I want it to be fun, some kind of funny.
I don't really know what it means either. So.
Wow. All right. So I'm going to make it do something. All right. The picks that I have, someone said, why is nobody talking about Hycroft mining? I own it. I'm on the AMC side, so I own both AMC and I own Hycroft. I'm not going to put it in the same vein that Patrick put it in, why Tesla into Twitter or GME into Bed Bath & Beyond. I'm just going to strictly keep it from the perspective of it's a gold mine. It's a gold mine company that was fledgling. So from the same kind of perspective, from a meme perspective, I don't think Hycroft was a meme stock, but a company that they could relate to, is everybody thought that they were fledgling, and now maybe they bought into a fledgling gold mining company. But since they jumped on board with them, they secured a lot of money to keep them out of the financial trouble that they were in, which was kind of interesting. So I do own Hycroft and I do own AMC. I can't again, put it quite on the same vein, but I could put it on the same path. That's as close as I can get. I could put it on the same path, not as eloquently as Patrick talked about it. Because of food shortage and all that kind of stuff, stocks like IPI, Potash, Mosaic, fertilizer stocks are on the rise. Something that I would say keep your eyes on. Apple, why am I picking Apple? For no other reason except for it's Apple. That's it. Because it's Apple. Yeah. That's all I need. It's Apple. All right. Glenn loves Apple. If anybody knows Glenn, everybody knows that Glenn loves Apple. I still think that fundamentally, it's a fundamentally sound stock, currently in an uptrend. Buy recommendation. I don't think you can ever go wrong with Apple. But it has been over time that Apple used to be one of the, used to be an undervalued stock, but with so much money in the market, because that's the place you're going to be making money as opposed to putting it in the bank, Apple is there now clearly overvalued. But it is a buy recommendation, good fundamentals, in an uptrend, high CI, that kind of thing. Tilray. Now, interesting why I picked Tilray as a weed stock, marijuana stock. Everybody knows that there is a bill on the floor of the House to start to consider decriminalizing marijuana. And the last time I did this on Midday Market on Monday, there was the story of morality came up. All right. If you don't believe in weed stocks, then don't invest in them. That's all I got to say about it. But between Patrick and I and everything that we do on this channel, we're trying to present opportunities for you to make money. And that's the reason why I am looking at the Tilray stock. They beat earnings today. It is up. It does have good upside potential. It is a little bit more risky. It is in an uptrend and is another buy stock. Now, Ventor is a stock that was news driven today. They won a big settlement or a suit against them for a company they did work for. They didn't pay, but they won the settlement. So that's a big move on the stock. The stock does have great upside potential. So plastics, they make plastics, great upside potential. The safety's not there. It is a sell recommendation because the stock's price is clearly below the stop price, which is at $2 and some change, but it is undervalued. So it's something that I would keep my eyes on. Palantir is another stock that I like because I think it's a stock that's way ahead of its time in what it does.
Glenn, not to interrupt you real quick, but go back to the FNGU graph real quick. Take a look at volume over the last minute or two.
You moved it. That was you. You told everybody in here, and they moved it. We moved the stock.
Put it on the 1 minute chart.
Nice. That's intraday 5 minutes, intraday 1 minute, current day. Nice move. That's a nice move.
Look at that big green volume right there.
Look at that.
A couple minutes ago.
A gap down. This could have a good opportunity to fade the gap as well.
My bet, based off the fib retracement, is it's sitting right at that retracement level I have. So 2175 is where I see it closing above today, at or above 2175, and it's right there.
And it's right there right now.
Yep.
But the volume pickup is huge. Volume pickup is huge. All right. There you go. Palantir takes data and it makes it. I'm not. I believe. I didn't. Was I being a jerk to you? Do you think I was? I thought you were laughing at me because you thought I was being a jerk. Did you think I was being a jerk? No.
Huh? Me?
Oh, wow, whatever.
Who are you talking to, Joey?
I'm not talking. I was talking to you.
Talking to yourself again, Glenn?
Wow. Wow. Palantir takes data and moves it into usable information that can be made to fit whatever you want it to do, no matter what field or service you're in. I think that it's way ahead of its time. It's getting contracts from governments all over the world. And I know it's still speculative, but I'm one of these people that feel really big about this, that once it's able to put its big boy pants on, it's going to be good. It's going to be really, really good. All right. And the last one was news driven as well. NIO is going to, they're supposed to be the Chinese Tesla. Hasn't quite panned out that way yet. But they are going to share their battery swap technology with rivals. which I think from an electric vehicle, instead of replacing the batteries, which could be a ton of money, which that hasn't happened much of yet in one of the stories that I've done, as far as the difference in maintenance between a combustion vehicle, and a electric vehicle. And actually, long term, the maintenance on an electric vehicle is a lot lower than on a combustion vehicle. But to buy an electric vehicle is a lot more cost upfront. But long term, the maintenance is a lot lower, and the power consumption as compared to gas is a lot lower as well. But NIO, in its battery swap technology, is willing to share it with its rivals. On Facebook, Stephanie says, Twitter, what do you think about it, both of you? Go ahead, Patrick. You can start off with that. What do you think about Twitter?
I mean, Twitter, I think it's got potential, especially with the decline in Facebook. A lot more people are going to be looking at it. And then you have the Elon Musk news. I think the Elon Musk news is going to help it at least get its share price back on target. Maybe help slow down the bleeding. But I mean, I haven't really heard of anything coming from Twitter that, makes it sound like they're really changing the company around or trying to fix the issues that they have. They seem kind of stagnant. So hopefully, over the next few months, Musk and them can get together and come up with some new ideas to revitalize it and refresh it. But I mean, aside from that, Twitter is just, it's stagnant. And so hopefully this will bring new things. But as of right now, just looking at what they currently are, not taking into account or not trying to project what they could potentially be, it's been pretty stagnant.
I'm of the same mindset. I think that a major influencer brought his weight behind it. I don't know if it's enough to take it out. What's earnings? Earnings 82 cents, growth 19%. It is in an uptrend, but it's still speculative. Relative value, relative safety, both below 1. But it's making money. I think that maybe Elon Musk can throw his weight behind it and push it higher. I'll put it on a 3-month graph. That was the news. But up until then, Patrick's right. The stock has been stagnant at a level of $40.98. And earnings, even though it's positive, has been falling.
And if you go back even further, it just looks even worse.
Yeah. So I don't know. I think that Elon Musk is a visionary. He's smart. And maybe you can use those things to get you out of the doldrums, but maybe not. The company is the company. Unless the company is really growing their earnings, it's going to do what it's going to do, and it may not be all that great. Once on the board, Musk will energize Twitter. All right. That on paper, theoretically, that sounds great. But how about he gets on the board and everybody says, oh my gosh, you're such a jerk. And it doesn't. That there's always that too. And he could turn around and say, listen, I own all you folk. So shut up and listen to me. He could do that, right? Because he's the biggest holder of the stock. Yes, I'm going to the extreme. Absolutely. I know I'm going to the extreme. All right, let's
sad,
go take
though, that a board member has more shares than the CEO.
Yeah. So interesting. Look at this. All of the major indices got up, with the exception of our VectorVest composite, to the level of the gap since we've been on. The Dow broke through and started fading the gap. The spiders broke through, started fading the gap. We'll see what happens by the end of the day. All right, we'll look at, and I can't look at Dogecoin in here. I don't have the capability of looking at money like foreign exchanges or cryptocurrencies. Hey, Joey, can you put us back on the main screen? The like when we came in on. Yeah, there we go. Patrick.
Yeah.
That was cool. I can't even say welcome to be my guest because this is as much your live stream as it is mine. So I think that this is going to be a lot of fun. And I hope you guys join us on a weekly basis where, and the cool thing is we may not always agree on things, and that's a good thing. All right, that's a good thing. This is a good way to hear different perspectives. He's a lot younger than I am. He relates me to being a boomer and an old dude and all that kind of stuff and geriatric. I'm starting to feel some kind of way about that, though, but I still love him. I still love him to death. And I think that us being here together, we'll help each other, as well as bring more content to you in regards to different perspectives and opinions. And, of course, Joey's going to always be Joey because
and
he's
if you
Joey.
guys think the same thing, if you guys like today's stream, hit that like button. We have almost 200 people here and only 45
We only
likes.
got
So if you guys
44
enjoy
likes.
this, you guys
What's
wanna see
up
more
with
of it,
that? What's
smash
up
that
with...
like button right now.
Yeah, man. If it was worth it today for you to stop by and see, and we did cover the minutes as long as we could for live as it was happening. And, as stuff comes along that we can, there's maybe times where we come on impromptu and we do a live stream on something that's important happening. So if you do like what you saw today, don't forget to hit the like button. There you go. I'm, for one, am going to come back to watch you two dance. Well, we ain't dancing.
Glenn sings, I'll dance.
I'll sing. He can dance. He can dance on. And actually, he can do what's the truffle butter? What's
the truffle shuffle?
Yeah, you could do the truffle shuffle. I'm not doing
How
the
do you
truffle.
not know what the truffle shuffle is, man?
You need to go watch the Goonies, bro, because it's inconceivable. All right, folks. Welcome to our first initial Wednesday dual stream. We look forward to having more of these, and make sure you tell your friends. All right. Miss McClintock says I'm too young to be a boomer. You hear that? You hear that, Patrick?
I actually got called a boomer for the first time a few days ago.
See?
I'm not even old enough to be a boomer, and I got called a boomer. So there we go.
Glenn is a Gen
don't
Xer.
feel bad about it.
That's true. I am a Gen Xer. I'm not a boomer. I'm really not a boomer. I am a Gen Xer. But Patrick keeps calling me a boomer. It's all right. He'll be blessed if he can get to live as long as I have. All right,
I
that's
just
what
call
it
you
is.
Grandpa.
Wow. I'm still feeling some kind of way about that.
Yeah, you really are, Grandpa.
Wow. I really, you know something? I really am a grandpa. I got 5 grandbabies. So I really am a grandpa.
Be a great grandpa.
No, none of them babies better not be having no babies for me to be a great grandpa. Ooh-wee. All right, folks, we're signing off. Patrick, you want to say goodbye?
Thank you, everybody, for tuning in. Hope you guys have a great rest of your day, and hopefully see you guys next week.
All right, later, folks.
Toodles.